Hey traders, welcome to this segment. On this course, we'll be explaining to us the meaning of base currency and the meaning of quote currency. Now, in our introduction to Forex, we actually explained that instruments and assets in the market are traded in pairs. Now, for you to successfully make money in the market, you must actually pair your currency with another. This signifies that whenever an asset is actually appreciating in value, one other one is depreciating in the value. Whenever the other one is depreciating in value, the other one is appreciating in value. That is the first thing you should know. Now, the other thing you should know is that the first three syllables, or rather the first three acronym, stands for the first asset. Probably let's look at this one. And this SAUSD is an acronym for gold, right? The USD actually acronym for United States dollar, while the EUR is an acronym for euro, while the other one USD is an acronym for what? United States dollars. So in this case now, the first three syllable words actually is the base currency, is actually the what? The base currency. And the second three syllable words is actually the what? The quote currency. So what it signifies is that when the price of the mark and asset is actually appreciating, it's actually in favor of the base currency. Now let's look at our chart here. So you can see here in this segment here we have more of buys here, and when there was buy, it was in favor of the gold, and when there was sell, it was in favor of the what? Of a US dollar. So it means that when there was a sell, it means that the gold is actually losing value to what? To the US dollars, right? So if for instance you are trading, you should know that at this point in time, when there's a sell, the quote currency is gaining strength, and when there's a buy, the base currency is gaining strength. When gold is appreciating, investors that have United States dollar will be pumping their money in the actually in the what? In gold. So the value of gold will be appreciating, while the value of United States dollar will be depreciating. Now when it comes to quote pairs, right? When gold is now selling, like okay, you can see in this case now there was a sell, there was a drop of gold, right? So the gold was dropping. So when the gold start dropping, it actually signifies that United States dollar is now gaining strength, while the gold is now losing strength. That is one thing you should understand. Now another thing again, we should know that when it comes to base currencies, or rather base asset more or less have the veto power. All right. So if for instance there is an high impact news coming into the market, for example, let's assume you are trading XAUSD once again, and probably there's an high impact news on US dollar, for example. Now if for instance the result of the US dollar was a negative, all right, it's actually the XA will actually be a positive. All right, that is, the gold will actually be a what? A positive, signifying that okay, as US dollar is losing, I am gaining. That's the veto power it has. All right. So if for example it's the US dollar is gaining, all right, for example the XAU will be losing. All right. So it's actually a vice versa when it comes to what? The forex market, because we all know that assets are traded in pairs. So if for instance the one is depreciating, one must definitely be appreciating, and that's when base currency and quote currency comes in play. Now another one we should know that is there are other pairs like the index, right? When it comes to this aspect here, you can see the forex, you can see the commodities, you can see the indexes, and you can also see the crypto. So all this has the base currency and the quote currency, except for the indexes, right? These are indexes. The indexes don't really have base and quote. They don't really have base and quote, but that does not mean that when you are trading, you don't correlate the base and the quote pair. Like companies that are situated 200 companies that are situated in Australia. So if for instance the 200 companies that are situated in Australia are actually buying, AUD will be what? Will dropping. That is, Australian dollar will be dropping. This one is EUST something something. Let's look at it over there. So if for instance this one is actually appreciating, or as EUST something is appreciating, euro will be what? Depreciating. So all this is, let's look at US 30 also. I think there's US 30 here. This is US 30. That's the most commonly traded indexes in the market. So US 30, for example, if US 30 is appreciating, what? The US dollar will what? Depreciating. So whenever we have US 30, like just assume there's an imaginary US dollar attached to it. So when trading the indexes, the index of any particular country is let me say for example there's indexes. When trading the indexes, guys, we should know that any index of any particular country is in correspondence with their currency. So if for instance that country's index is appreciating, the particular country's currency what will be depreciating. If the index is depreciating, the particular currency will be appreciating. So that is how to know how to trade quote pairs and currency pairs. But mostly when it comes to the forex market properly, most currencies are what are traded in pairs. So all these things, they are all paired with each other, and that pairing is what we call the first three syllable is called the, or rather the first three acronym are called the base currency, while the last three acronym are called the quote currency. So the quote, whenever the quote is appreciating, the base will be depreciating. Whenever the base is depreciating, the quote will be appreciating. Another thing again we're going to explain is currency correlation. Now, currency pairs, most especially the major currency pairs, where the US dollar is either the base or the quote, they have similar market behavior, especially when there is when all of them are when the US dollar is the base, all the market that has US dollar base have similar behavior, and also all those ones that have US dollar quote equally have similar market behavior. That is to say, let's give an example. This one is XAUSD, that is gold, Euro USD, GBP USD, BTC USD, NZD USD, and AUD USD. These currency pairs that where the US dollar is the quote right here have similar behavior and similar market formation. All right. So that is to say, when there's an high impact news and probably the US dollar is dipping, or rather is dropping, all those ones that have where US dollar is the quote will be buying, all right, because US dollar is dipping. So they have no option than to buy, or rather or than to be running bullish. One also, where the US dollar is the base, all right, like here you have the euro USD card, USD CHF, USD JPY, USD card. These areas where the US dollar is the base, we also have the price also will be buying also, right? Sorry, if for instance there is a sell in USD, probably there's a news that came up and the news is tanking, like it's dipping down, right? In this situation, the this currency will be dripping, right? It will be dripping. So all this where the US dollar has a base, right? We have similar behavior. So in the market, this currency correlation is very significant, because if you know how I'd say a pattern plays. Let me honestly say, for example, now you are trading a pattern and you see that okay, this particular pattern is going to be a sell. And if you look at, don't be surprised if you look at other patterns, that other currencies with similar, where either the base is either US dollar or the quote is either US dollar, that have similar this thing formation, where they are all major currency, it might likely have similar pattern or similar formation. All right. So but you now will now decide to go for the one that has high liquidity or high volatility. So when you are going for the one with higher volatilities, you find out that it becomes more easier for you to make more profit, instead of you to sit on the one that is either not moving much more, or rather that is moving, but not in all cases. There are cases whereby the currencies might not be moving that fast, but whenever there's an high impact news, right, or whether there's a news in the market that is fundamental, when we go into fundamental analysis proper, right, you understand that prices of assets are of all those currencies that are major, they are either that are in the base area will be moving concurrently, and also price of currencies in the quote area will moving concurrently, most especially when it is where they are all correlating, all right, or most especially when they are among the major currency pairs.